Qualcomm stock is seeing explosive auto growth. They just reported their fifth consecutive record quarter in automotive revenue with a mind-blowing 68% year-over-year growth. But before you get too excited, there's this whole drama brewing with ARM that could shake things up. Speaking of shaking things up, if you don't want your investment thesis to be shaken, make sure to hit the thumbs up and subscribe button to stay updated on all semiconductor analysis. All jokes aside, let's dive in and see if Qualcomm deserves a spotlight in your watch list.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
First, let's break down their latest numbers from quarter 4. Total revenue was $10.2 billion, up 19% year over year and up 8% quarter over quarter. QCT, which is their chip business revenue, was $8.7 billion, up 18% year over year and 7% quarter over quarter. If we look at their QTL, which is their licensing revenue, it was $1.5 billion, up 21% year over year and 15% quarter over quarter. Earnings per share hit $2.69, up 33% year over year and up 13% quarter over quarter. Not too shabby for a company that some folks thinks is just a phone chip maker, right? Now, let's break down the real story here. Qualcomm's transformation, and CEO Cristiano made it crystal clear on the earnings call. They said that they're evolving from a wireless communication company into a connected computing company for the age of AI, and they're not just talking the talk, especially if we look at their growth engines. First, we'll start off with the AI PC revolution, which is one of my favorites at the moment. Qualcomm's not playing around in the PC space. They've expanded their portfolio with the Snapdragon X Plus 8-core platform, which is providing impressive performance and battery life. But get this, they went from 20 platforms in May to 58 platforms now. That's almost a 3x increase in design wins. We're talking major players here. Dell, HP, Lenovo, Samsung, Acer, and Asus are all jumping on board. But it is important to remember that AMD and Intel do have a strong foothold here. Next, we have the automotive dominance, and this is where things get really exciting. Remember the 68% year-over-year growth I mentioned? They hit $899 million in automotive revenue this quarter, up from $535 million last year. They're hitting record numbers because they're winning new models, not because of market conditions. As we know right now, the automotive market is pretty weak, so it's pretty impressive to see this strong year-over-year growth. Their new Snapdragon Cockpit Elite and Ride Elite platforms pack some serious muscle. The kicker is these platforms can combine both digital cockpit and automated driving functions on the same chip, which is huge for automakers looking to build software-defined vehicles. Mercedes-Benz and Li Auto are already on board, and according to management, design traction on the chipset is actually very high, but again, strong competition in this space. Next, we have mobile and AI, and here's where things get somewhat spicy. Their Android revenue grew 20% year over year, even after losing Huawei revenue. That is insane. Next, we have IoT and Edge AI. And the industrial IoT space is evolving fast, and Qualcomm's positioning themselves perfectly with their new IQ series. In quarter 4, IoT revenue hit $1.7 billion, up 24% from previous quarter. Now let's talk about the challenges and risk because there are quite a few. The main one is the ARM drama, and let's break this down, all right? We need to talk about this ARM situation because it's kind of complicated. So ARM, the company that provides the fundamental architecture for pretty much every mobile processor out there, is suing Qualcomm over their custom Nuvia processor. Here's the deal. Back in 2021, Qualcomm acquired a company for $1.4 billion. That company was working on custom ARM-based processors, and Qualcomm saw this as a way to supercharge their chip design, especially for PCs and data centers. The technology from this acquisition is what powers their new Orion CPU, which is crucial for their AI PC strategy. But here's where it gets messy. ARM is claiming that Qualcomm needed a new license to use these custom CPU designs, and they're saying that, hey, even though that previous company had the license, even though you acquired the company, the license doesn't necessarily transfer over. So ARM wants Qualcomm to renegotiate new license and potentially pay more money at the end of the day. Qualcomm's response, their CFO stated on the earnings call that they have very broad, well-established license rights that cover their custom designed CPUs. So they are very confident that those rights will be reaffirmed, and the trial is set for December of 2024. Now, why does this matter? So, two scenarios. If ARM wins, Qualcomm might need to do the following: negotiate new license, potentially pay more, and I think if they win, this is the most likely case, or the other things are modify their custom CPU designs. I believe would be the worst case scenario there, but I believe the most likely scenario, like I mentioned, is potentially pay more for their licensing fee. They might also have to pay damages for past use as well. Now, if Qualcomm wins, it's full steam ahead with their current strategy. Either way, the uncertainty could impact their relationships with PC manufacturers and automotive customers. The most significant risk isn't just about the money, right? It's about Qualcomm's entire strategy of transforming into this complete computing company. Their custom CPU designs are fundamental to competing in the PC market against x86 processors and in providing high performance automotive solutions. That's why investors need to watch this trial closely. Then there's also the Apple risk, and this is a big one. CFO confirmed their planning assumption is that their share will drop to 20% for the 2026 iPhone launch, and then the agreement ends. That significant revenue stream potentially disappearing. Their current 3-year agreement covers 2024, 2025, and 2026 phone launches, but after that, it's uncertain. I believe there is the possibility of another agreement, but again, that uncertainty brings more volatility to the market. Next, we have market concentration risk. While they're diversifying, like I mentioned, handset revenue still made up 6.1 billion of their 8.7 billion QCT revenue in quarter 4. That's about 70% of chip sales still tied to the mobile market. Plus, they're heavily dependent on the premium tier, which makes them vulnerable to any slowdown in high-end phone sales. Next, we have the China exposure. Their guidance for quarter 1 includes over 40% sequential revenue growth from Chinese OEMs. While that's impressive, it also highlights that their significant exposure is in the Chinese market, which carries geopolitical risk. Financial position is pretty strong. The company generated and returned 7.8 billion to shareholders in fiscal 2024 through dividends and buyback. They also authorized a new with 15 billion stock buy program. The company maintains a strong balance sheet with 13.3 billion in cash and marketable securities. Now looking at valuations, they're trading at a much more reasonable multiple compared to other semiconductors, especially considering their growth rates in automotive and IoT. I mean, we can see current PE ratios are 18.7. PE ratio 4, which is the next 12 months, drops down to 15, and for 1 year is 13.54. If you are excited about all their growth opportunities, Qualcomm, in my opinion, is sitting at very, very cheap valuations. Now, here's my take. I actually think Qualcomm's pretty interesting right now. They're not just surviving, they're transforming. The ARM situation is concerning, sure, and losing Apple business isn't great, but that's still uncertain. At the end of the day, they're building new growth engines in automotive, AI PCs, and IoT that could more than make up for it. But hey, don't just take my word for it. Do your own research, consider your investment goals, and maybe keep an eye on their upcoming Investor Day on November 19th. Well, that's it for today's video. Take care and see you for more AI semiconductor news. Take care.